Okay, welcome. My name is Dave. I'm a professor, a physics professor in Australia. I'm not really that concerned about giving my full contact details at this point, but I will put my email address up there just in case anybody wants to contact me, and because I have no idea how much or how little attention this is going to get. But anyhow, the point of this is just I feel like I really need to get this out because right now it is June the 30th, actually not the 29th, but the 30th in Sydney, Australia, and the markets, the world markets have now been operating for 2 days this week, Monday and Tuesday, the 29th, and I'm doing this now because I feel that we're on the cusp of a major crash, and I want to get it out there, and hopefully, maybe, I think it's perhaps a bit too late at this point, but if I can even help a couple of people avoid this major crash, then I think this will be worthwhile. Like I say, I probably left it a bit too late, and I'm doing this at the last minute because I think there's really no time left. And the next few days is going to see pretty much all hell break loose. So I'm doing this now, and I'm going to post it on YouTube tonight just so the date is up there because, I mean, let's face it, anybody can do post-analysis after the fact. You know, sort of argue that they knew what was going to happen. I'm saying it here now. The evening of June the 30th in Sydney time, so it's before the markets open on Wednesday, June the 30th in North America. So this is my take on what I think is going to happen in the next while, and again, this is just a very brief seat of the pants summary. It by no means reflects my full analysis on this. I've been working at this studying stocks for about almost 20 years now, and I can tell you that the position that we're in right at the moment is absolutely unique. This is the last 10 days of the Dow, and so you can see that this is that little peak we went through a few days ago, and sort of dropped off, hung up for a couple of days, and then yesterday, Tuesday, in the U.S., it dropped by about 200 points. In the scheme of things, this may not seem like a big deal, but as I'm going to show you, I really think this is the beginning of the end. Obviously the market's not going to end, but they're going to be going through quite a bit of strife. So this is a bit of a longer time frame. So this is 2 years of the Dow, and this is the action of the last few weeks. And I myself actually decided to completely get out of the market for quite a few reasons that I'll try to cover some of them today in this. Probably what's going to end up being about 20 minutes, I think, no longer. Why I got out of the markets right around here. The fact that I got out of this peak was just a sheer accident. I'm not trying to sort of time things on a daily basis, but this is where we are right now. The main, where I want to start off here, I can go as deep as you want, but the first zeroth order picture of what's going on here is just a very simple picture from really what's available in almost any textbook, which is the classic head and shoulders top pattern. And I'm just amazed that these patterns keep repeating and repeating, even though people know that they're out there and they're obvious and they have a major impact on how the markets behave. It still keeps happening. So this is where we are right now. You can obviously see that the head and shoulders, basically what it is the market comes up, makes a lower top and a higher top, which is the final peak, and it comes back up, tries to overtake the second peak. Very often the second peak is weaker than the first one, and then it drops away, and the rule of thumb is that when it breaks this support line in here, then it just collapses. And as you can see, we're just about at that point now, and the question is, where is it going to drop? And I'm afraid that the answer to that is pretty scary, and I'll try and show that to you, try to give you some indication of where I think it's going to end up. But you can see this head and shoulders appears everywhere, and it even appeared, this is the so-called GFC, global financial crisis, a couple of years ago, and you can see that it appears in the negative sense in the bear market. So you've got a peak, small peak, major low, and then another minor low. This is really the inverse of this this pattern up here. And so what we want to do is look at, well, this is that support line that I just drew and indicated that when it drops through that, that's when you really lose completely all support. Okay, so this is looking at the Dow in a 10-year time frame. And again, you can see these head and shoulder patterns appearing all over the place. You can, this is the head and shoulder that we're going through now. This is the one of the global financial crisis in the bear market, the negative sense. This is the all-time peak of the Dow here, which is, again, it's a classic head and shoulder top here, just boom, boom, boom. Okay, so these things, and here again, in the negative sense, this is the WorldCom crisis, if any of you remember that far back in 2002. So these things keep happening all over the place. But what is, for me, the scariest part about this whole thing is if you look at the longest time frame here. Okay, so this is that support line that I mentioned. When it crashes through that, you usually get a retest of this line, and then bang, it drops away. And I mean, this dropping is an understatement for this, what it did after that. Okay, now this is, to me, this is the scariest, one of the scariest graphs. This is the Dow over the last some 35 years, I guess, up until the 70s, in a linear plot. Now, if you look at this, okay, this is where we are now. This whole thing is really shaping up to be, I mean, certainly if this local head and shoulders pans out, then this whole thing here is headed to be a massive, massive head and shoulders top, with the second peak here, the first peak here, and the overall top here. Now, I don't think I've ever seen head and shoulders in markets working on this kind of time scale. This is massive, over a 15-year time scale, head and shoulders. But if this is what it's turning out to be, and there's a lot of other reasons to think or to suspect that this really is the last of the remnant of this sort of bull market, not just the head and shoulders arguments, then where are we going to end up? Well, we're going to end up a lot lower than either of these two peaks. That's the way these tops always work. So just to take you through a bit of a tour through this last 35 years in just a couple of seconds, this little blip here, which is almost unnoticeable, is that major crash of '87. Now, looking at this, I mean, it didn't seem, at the time, it certainly wasn't a minor crash. I mean, everybody knows how serious it was, but on this scale here, this really does look like a fairly minor blip compared to this, and I think compared to what's going to happen afterwards. Okay, so chart patterns and head and shoulders in particular is one, it's the sort of zeroth order approach that I take, because it's the simplest and it's well documented, and it's actually reliable. I mean, the head and shoulders, it works about 90%, 95% of the time. It almost very rarely fails. So it could in this case. I mean, I could be eating my words in a few days, and if I am, I would be very happy. So